Hi everyone, welcome back to another weekly market update. Last week was very eventful, and now with Mr. Samer, we're gonna take a look for the next week market update.
All right, as she's mentioned, last week was very eventful. So we're gonna start speaking about the stock markets, referring to Nasdaq. Post the Fed's interest rate cuts at the 17th of September, we had huge volatile movements. So due to the cut with 0.25 pips, we had Nasdaq going down. However, the reason why it continued going up because investors were too optimistic, and that's because the Feds, even though the dollar was weakening for the past while continuously, still the Feds decided to cut the rates. So post-cut, we had this negative movements, negative or basically bearish movements on Nasdaq because of the cut. However, investors were very optimistic about the economy because the Feds were optimistic enough to cut it anyways, even though the dollar was weakening. So from here, we can see that Nasdaq is moving in an uptrend and is broken above its resistance, reaching to the upper trend line of this, let's say, bullish movement. So from here, we can expect Nasdaq to make a retracement to that support within the ascending triangle or moving up triangle, whatever up movement it is. And we can expect it to continue going up from there. So if you're looking to go bullish on Nasdaq, get a confirmation from this support once it retraces back, and then we can enter back into it. So that's about Nasdaq. Let's go into Bitcoin. The Fed decision has caused a lot of volatility movements on Bitcoin. So on the 2 hours time frame, we can see that Bitcoin is moving in an ascending channel. However, we have many bearish signs into it. So it's true that currently Bitcoin is laying down on the lower trend line of this ascending channel right above the support. However, we had a continuous momentum of bearish movements lately. Especially this happened after an attempt to liquidate the support. And as we all are familiar, Bitcoin always likes to take liquidity before a continuation into its bull runs. So what we might see right now is a retracement. So option number one is a continuation, break above this resistance, retracement, and a continuation in this channel. But this is the obvious, but what's more likely to happen is, especially because we have some sort of, let's say, expanding wedge, even if not as tight and neat as usual. It's a combination of a megaphone and an expanding wedge. So what we can see or expect is a retracement to this inner resistance level. And from here, we can see or expect Bitcoin to liquidate this support, and we could look for an entry right about these levels. So this is not too, let's say, backed up with enough information extracted from the chart yet technically, but what we want to see is a confirmation by the levels of or around between 100,000 16,500 to 100,000 17,000. Between these two levels, we need to get a confirmation of where Bitcoin is going to pump, whether to the upside or downside. So if you want to go for Bitcoin, it's recommended for you to go for short term. Don't go for long, not at the moment. If you want to go for long, this is our optimal entry, right? About the level of 100,013 United States dollar per coin. So that's about Bitcoin. Let's go into Nifty50. All right, looking at Nifty50, as usual, it's not too complicated of an asset to consider analyzing and trading. So finally, Nifty50 found a way to break up or above the resistance that has been consolidating within for the last couple of weeks. And we got our confirmation here to enter for a breakout. So right now, Nifty50 is at a resistance of previous price movements. So this is why we found a bearish marabouts at the downside. So we are having also, although there is a bearish marabouts, we're having it forming a bull flag. So the higher odds, it's that we need a retracement to the support before looking for a bullish entry, and we have a certain confirmation from here. However, if Monday markets open with a marabouts on the bull side, you will want to go for a breakout trade on the bullish side, also short term. So Probably after, if we get a Marubozo, this can cause Nifty50 to even continue in an impulsive move to the upside, and then we can consider that retracement for a long position. So keep an eye on Monday markets, and that's it about Nifty50. Let's go to EURUSD. Looking at EURUSD, it's moving just nicely within an ascending channel. So post the Fed's rate cuts, of course, because of the pessimism about the United States dollar, initially, because of the cut itself, we saw the euro going up. And post that, technically, we had a bull flag, and that's what even caused more of an impulsive movement to the upside, liquidating the prices above the resistance and also compelling to technical analysis. However, we had post that, because of the investors', let's say, confidence in the United States dollar extracted from the Fed's cuts and conference. So we had it pulling down to a support level within this ascending channel. So we can expect EURUSD to reverse from this short period of time bearish movements to continue within the ascending channel, especially that we've seen multiple reasons why this bearish movement on EURUSD isn't too consistent. So that's about EURUSD. Let's go into gold. And of course, as all of us traders would figure, volatility in the market means gold going up. Hence, gold went and found an uncharted price again to all-time history, crossing 3,700s. So right now, gold is very premium, and we had huge drop from that level once it liquidated above those highs. So this bit of bullish movement isn't necessarily that let's say traders are very scared of volatility in the market. This is for two reasons: traders closing their short positions from all-time highs, and also because it was market closure. People expected, or some traders expected, certain volatilities, hence we had this movement to the upside. However, since it is there, people compel to what they see the majority of traders are doing. So we can expect gold to keep consolidating within this range, possibly inside an ascending triangle. So that's what we're looking up for gold. Gold is very unsustainable currently to trade. You wanted to trade, you should have entered before. As we've been telling you, buy gold at better prices. It's not optimal to trade gold right now at the moment. Until we get better confirmations, you want to enter into it, make sure to follow proper risk management rules. So that will be it about gold.
Thank you, Mr. Samer, for sharing your insights. And now we're gonna take a look on the fundamental outlook with Mr. Amir from London.
Greeting everyone, Amir Amidian here, Senior Fundamental Analyst at Zylostar and Master of Finance student in London. Let's see what happened in the financial markets last week. Last week, financial markets were packed with the headlines as we got the latest update about the interest rate decisions by the big central banks such as Federal Reserve, Bank of England, and Bank of Japan. I want to kick this session with the Federal Reserve. The US Federal Reserve lowered its benchmark rate by 25 basis points to 4% last week, citing a softer labor market while inflation remains elevated. Chair Powell framed the move as a risk management step, with projections pointing to 2 more rate cuts this year, as you can see in the dots plot. We're going to dots plot and SEP, or better say summary of economic projection. It shows moderate growth for the GDP of 1.6%, an unemployment rate of 4.5%, and PC inflation easing from 3% in 2025 to 2.1% by the end of 2027. Let's have a look to the latest meeting from MPC of the Bank of England. The Bank of England kept rates unchanged at 4% with 7-2 votes and slowed the pace of quantitative tightening. Markets reacted with a slightly lower gilt yields and modest drop in sterling, as decision was mostly price in. Traders now expect any rate cuts to come slowly, likely toward late 2025 or early 2026. And the Bank of Japan is the next one. The Bank of Japan kept its key rate at 0.5% last week, maintaining its ultra-loose policy. It signaled a cautious shift by starting to sell ETFs holdings. Markets viewed the move as a gradual step toward normalizing monetary policy. Canada is the next one. Canada's inflation picks up in August. Canada's annual inflation rate edged higher to 1.9% in August, up from 1.7% in July, reported by the Central Bank of Canada. Excluding gasoline, prices rose to 2.4% year on year, with food and shelter driving much of the increase. Markets viewed the data as keeping inflation within the Bank of Canada target range, though the uptick may temper expectations for aggressive rate cuts, as you can see. Let's jump to the US. US retail sales rose to 0.6% in August 2025, beating expectations, with core sales excluding autos and gas up 0.7%, showing broad-based consumer strength. Year-on-year sales increased 5%, though a softening labor market and inflationary pressures keep the outlook cautious. And eventually, UK inflation holds steady in August. The UK's annual CPI remained at 3.8% in August 2025, unchanged from July, while core inflation is slightly to 3.6%. Rising food prices, including chocolate, beef, and butter, drove much of the increase, keeping the Bank of England cautious on the interest rates. For the upcoming week, the main concentration will be on the US, as we are going to get the latest updates about the GDP and also PCE inflation index. And don't forget, the next week also we should pay some attention to the different PMI numbers from the different regions such as US, Canada, UK, and the US. And don't forget, at the beginning of the week, initially we are going to get some speeches from the different central banks such as Reserve Bank of Australia and also the governor of the BOC, or better to say Bank of England. Stay tuned with Zylostar. See you next week.
Thank you for watching and stay tuned for fresh drops on the next week.